with this business, as with any other, is you have to make money. Beneath the glitz and the glamour, it's a tough world. The dividing line between success and failure is very thin. Jobs, money, bonuses, security, everything depends on winning the business. But that doesn't mean to say that you take any money or any assets just so you can show the required increase in your book. And that's where Aldermac went wrong.
Having started out as a financing company serving trade flows between Europe and the booming economy of the United States during the second half of the 19th century, Aldermac expanded rapidly, particularly in the years following the Second World War, until by 1990 it was one of the largest and most powerful banks in the world, with a market capitalization of $50 billion and a network stretching across the world. Much of this success in recent years had been generated through the strength of the private bank, which had seen its contribution to group profits rise fourfold, such that by 1998 it accounted for nearly 25% of those profits worldwide. This phenomenal growth had been built on the back of a fierce commitment to client satisfaction, combined with an independence of spirit and a willingness to push banking rules and regulations to their limits, an approach which sometimes found itself at odds with other Aldermac divisions.
Yeah, I remember on several occasions coming under pressure from the private bank. Oh, can you do this trade or that trade? Or can you book it on this date instead of that date? Stuff you knew was taking it to the limit, but they wanted you to do it anyway. The most common one was parking positions, where they, on a particular month's end, they want you to take a client's position in dollars and put it on our books, the bank's books, so that for reporting purposes, it seemed like it was our position and not the client's. And this was something the client was demanding, maybe for some tax reason, but obviously we couldn't do it. And it wasn't just the relationship managers who wanted this. Sometimes you get some quite senior people from the private bank, from outside the territory, outside Hong Kong, who phone your boss to try and get the deal through. And one of them said to me once, he said, Karen, we are the fighter pilots of the bank. Everyone else is just ground crew.
Well, of course, that is one of the things that separates private bankers from other types of bankers. Your position with the company depends upon these relatively few, very wealthy individuals whom you have to try to keep happy. A private banker does tend to become an advocate for his client within the organisation where he, the banker, works. In doing so, he or she sometimes finds themselves arguing with other colleagues who wear other hats, particularly risk function hats. The trick, of course, is always to be aware of this inherent conflict and to remember that when it comes down to it, you work for the bank and not the client.
This conflict had not escaped the attention of the bank's auditors, nor indeed its regulators. Throughout the late 1990s, the private bank was subjected to repeated criticisms in internal audits and external regulatory reviews, many relating to money laundering control deficiencies. One May 1999 internal audit report stated, "It seems that the private bank's priority is to focus on customer service, even when it means internal controls would be compromised. The Bahamas and Cayman Islands units repeatedly failed to obtain adequate Know Your Customer information to enable them to assess money laundering risk and suitability." Not surprisingly, the poor reports came to the attention of Aldermac's lead regulator, whose inspector wrote in November 1999, "The auditors should be a key asset of the private bank. The problem is that for years, audit has been identifying problems and nothing has been done about it." This kind of attention was unwelcome, but not seen as particularly disastrous. Saad al-Sayah, the only Alna Bank private bank employee, past or present, who agreed to speak with us in the making of this programme, was a senior relationship manager in the London office, responsible for a portfolio of wealthy clients from the Middle East and Britain. Now out of banking and pursuing business interests of his own, he holds strong views on the private bank's senior management's attitude towards compliance in the late 1990s, believing that far from being put off by the negative reporting, some of them actually saw it as the price of doing business.
What was the reaction of senior management in the private bank to these audit and regulatory reports?
Lip service.
What do you mean?
I mean that they went through the motions of being concerned about the reports, but that in reality they were not too perturbed. The view which some of the managers held was that if you were not getting the occasional 3 or 4 score...
That's the lowest audit score
Yes,
get.
the lowest. If you weren't getting the occasional 3 or 4 score in reports, then your business was too control-orientated and you were not taking enough risks. And who could argue then? The profits were there.
It was against this background of poor audit reports, rapid business growth and increased regulatory attention that in February 2000, a Moldovan businessman, Hegit Milrek, a long-time client of the Alna Bank private bank, telephoned his relationship manager, Alison Carter, in London and asked her on the same day to meet with him and Halit Kransky, whom he wished to introduce as a potential client. Carter was Alna Bank's most senior private banker in the London office, handling Eastern European accounts. At the meeting in London, which was attended by Carter and an even more senior private bank executive, John Fadinas, Melrick provided the bankers with a strong personal reference for allowing Kransky to open an account. He said that Kransky was the brother of the former president of Moldova, Voit Kransky, and that since the breakup of the Soviet Union, he had held a succession of posts at state-run agencies. Two months later, Carter flew to the capital, Vresk, to obtain Kransky's signature on the required account opening documentation. She proposed accepting him as a client without investigating his employment background, financial background or assets, and waiving all references other than the one which had been provided by Hegit Milrek. The head of the Western Area Division of the private bank, Philip Harley, approved the opening of the account. And despite the potential sensitivity of the new account, the private bank's country head in Moldova, Eddie Ilzar, wasn't consulted and didn't learn of the account until almost a year later. In June of 2000, Carter wrote in a monthly business report,
"This relationship has potential in the $15 to $20 million range,"
but had still made no attempt to conduct independent checks on the sources of this anticipated stream of money.
It is incredible, I know. But when you learn more about the environment of the private bank at that time, it starts to seem less incredible. There are bank policies and procedures which require details of the client's background and the source of his wealth to be filled out and kept. So, is this done by most people in the bank? No. And when the bank management, not the private bank management, but the full Alna Bank senior executive, when they discover this, do they take effective... Talk is one thing, but do they take effective action to ensure that these details are obtained? No. And so what is the reality for this bank? We become the bank for anyone with money. We don't care who you are or where you got it. All we care about is how much of it you have.
No, I'm sorry, look. The fact of the matter is, you simply cannot go round brandishing 20-page policy questionnaires, name, address, source of wealth, in front of high network value clients. That's not the way they work. It'd be shown the door pretty quickly if you did. And rightly so, in my view, too. No, what you are expected to do when you go back to the office is to carry out a fairly thorough check on the client. basically to see that it all hangs together.
And why do you do that?
Well, the main reason is to establish that the source of wealth is everything it's supposed to be, and that also to establish that the source is legitimate and that it doesn't come from drugs or something like that.
And is it negligent not to do that?
Well, you say... Well, yes. Yes, I think it is in this day and age.
After accepting Kransky as a client, the Alnabank Private Bank opened multiple accounts for him and his family. The London office opened 5 accounts, and the private bank's trust company in Switzerland, Alta Secor, talked to him about opening additional accounts in the name of a shell corporation. An Alta Secor employee wrote, "The client requires a high level of confidentiality in view of his family's political background. Please note for the record that the client is extremely sensitive about the use of his name and does not want it circulated within the bank. In view of this client's background, I think we will need a detailed reference from Alison with Martin Johansson's sign-off." This detailed reference was never obtained, nor was Johansson's sign-off. Nevertheless, Alta Secor in the Cayman Islands activated a Cayman Islands shell corporation called Fasco Limited to serve as the owner of record for private bank accounts benefiting Kransky and his family. Alta Secor used 3 additional nominee companies to function as Fasco's board of directors: Shaney Investments, Middleton Investments, and Cockcross Investments, and a further 3, Butte Limited, Hanover Limited, and Hyde Limited, to serve as Fasco's officers and principal shareholders. Alta Secor controlled all 6 of these nominee companies and routinely used them to function as directors and officers of shell companies owned by private bank clients. Approximately a year later, in June of 2001, Alta Secor also established a trust identified only by a number, PTV 4131, to serve as the owner of Fasco Limited. The result of this elaborate structure was that Kransky's name didn't appear anywhere in Fasco's incorporation papers. And since the private bank didn't disclose the name of the shell company, Fasco, to anyone but the Alta Secor personnel who administered the company, not even the relationship manager, Alison Carter, knew the name of the Kransky Trust Company. With additional accounts opened for Fasco in Switzerland, along with a so-called special name account for Kransky and his wife in the name of Caesar, the structure was now in place for what was to follow.
Why is it that private banks create these anonymous structures on behalf of their clients?
Because their clients instruct them to do it, in order to protect the confidentiality of their accounts.
Why are they so concerned about secrecy if they haven't got anything to hide?
Now, there you go. I mean, that question belies, a complete misconception, complete misunderstanding of what private banking's about and what private banking customers are for. You see, people like you see things like special name accounts, numbered accounts, trust companies, director nominees and the like, and you smell a rat. You think, must be some shady business, some shady dealings here. And what you don't realise is that there is a fundamental difference of circumstance between yourself, say, and political leader, president or head of a large corporation. Information about your financial affairs are of absolutely no value except to anyone but yourself. You're not famous, you're not wealthy, you're not powerful. If you were the president of a country, however, or a family member of the president, or head of a large corporation, then information about your finances would have an immediate value, a commercial value, as in you could sell it to almost anyone. Political enemies want to make capital out of the fact you're wealthy, corporate raiders trying to find out how much money you're taking out of the company over the last year, newspapers trying to sell a few more copies. So, That's why we have secrecy in private banking. And just because we have secrecy product accounts doesn't mean that the sources they're derived from are necessarily illegitimate or illegal.
Well, fine, all very well. But I go back to what I said earlier. Who is this you are dealing with? When I was at Elna Bank, I had no difficulty in using secrecy products. But you know, it has to be with someone whom either you know personally or about whom you've conducted essential checks and verifications. Otherwise, you lose control completely. And your client, whoever he is, becomes officially lost in a screen of shell companies and trust vehicles, and you are not even aware of what is happening. And you have done neither any preparations to cover your own backside. Who will allow such a thing? Apart from and who will allow this? It's ridiculous.